Good morning. All right, we're going to do the ORB strategy with a little twist on it. I'm already in, so I didn't get in on my sell signal off the Power Trade Pro. I decided I was going to do Nasdaq on the ORB strategy. So it pulled down. This red zone right here is a 4-hour zone. It's off of the recent high that we had made and broken. So it's off that all-time high that we had last week, and then we actually created a high above this, and it has fallen back down to that level. So not sure if we're going to get a bounce here, if we're going to get a break and run through. So I didn't short here on the sell signal, thought about it, but I thought, no, that red zone's there. I'm going to leave it alone. It pulled down, and then let me see if I can show my cursor here. Sorry. So it swung down and pulled back up and made a lower high in here and pulled back down, making a lower low. So again, we're in that bearish formation, lower, a high, a lower low here, lower high here, lower low here, lower high here, if you want to call it that, lower low here. And then it pulled back up. And basically it pulled back up to test this inside top. Now I'm on a 1-minute chart. To watch these and take my entries. I'm looking for a 1-minute candle to close just past the higher low to get in. So I thought I'd take a chance. It would retrace here, retrace that inside top, and so I drew my retracement line. Since it was bearish over here, that would be a retracement line. It pulled through. I went ahead and took this candle when it closed here. So this candle broke through the retracement line. I went ahead and took it short. Might have been a bad decision. I don't know. I'm going with a tight stop loss. So the stop loss is right above this high. And right now it's pulled back up to test that, inside top that highs. I should actually probably have my stop up here a little bit above this high right here. So we're looking at this high here, and ultimately my stop should be above there. So I was hoping it would stay down below this inside top. I don't know if that's going to pan out or not. We'll watch. So that would be the only twist on this. The ORB strategy is basically marking that 15-minute range or 10-minute range, or 15-minute or half-hour range, and then trading when price closes above the high or below the low. So this tool automatically marks the first half hour is what I have. It's set up to. So I've got it set up to where it marks from 9:30 to 10 o'clock here. So if we go look at 10:40 or 9:45, so let's do that, because some people will take this on and trade it at the first 15 minutes. Okay, I don't do that because I've gone back and back tested this visually and had this tool set up marking from 9:30 to 10 with a line automatically marked at 9:45. And a lot of times what I would see is this right here, where if you look at the 9:30 to 9:45, would be this low right here. That would be your low, okay? So if we mark that, again, if you're marking the first 15 minutes, then basically you're marking from this high to this low, first 15 minutes, and you're trading a break and close below that, okay? And this today did exactly what I've seen overall during a lot of different a lot of the time, most of the time, okay, to where, as you see over here, this candle closed below that low, and you would actually take that trade, okay, with your stop at a quarter stop loss or halfway. We've already hit that point. We've already hit the halfway point. So you'd have been stopped out. So this loss would have been a stop for you, okay, and then you're waiting on it to break either way. So I don't do the first 15 minutes because of that reason right here. I've seen it too many times. So let me take that off. So it looks like bad decision here. I don't know yet. It's just now hitting this high. You know, it could go up and wick me out and then still go short. I don't know. I thought I would take a chance and trade. So my first trade might be down. Right now I'm down about 500. So we'll see what happens. And then after this, I'm going to wait for it to break the higher low. I just thought this looked like a decent opportunity to take that trade and go short. You know, my cautions were basically that it was at that red zone. You know, the red 4-hour zone. So that was my number one caution if taking this trade would have been, or else I would have went in with more contracts. So yeah, we're going to get stopped down on this. So I might as well close it out because it should pop and take us out. We've got a lot of room in here to move over here. We'll go ahead and it's going to take us out about, what are we, 650? So about 675 maybe, 700. I swear if it's going to do it, I'd rather have it just do it and not play around with their stop by one tick like that. We'll see. We'll let it ride, but so again, I thought about shorting over here when the sell signal came, you know, right before 9:30 or right at 9:30 off the Power Trader Pro. I didn't. I thought, no, we'll stick with this orb strategy because I know a few people in the group are trading it. So I've been just doing some live recordings, trading it. Nothing much exciting to do. I'm only trading this one thing in this account today. I'm not trading anything else in this account. New candle starting. I'd expect it to push down a little bit and maybe test those, you know, these highs in here, this level, which is basically that inside top from over here. That may be all it does. I don't know if it's going to go beyond that. Might push below it and then pull back up. So we'll let it go, see where it ends up. With that 4-hour red zone there, I just don't have a lot of hope for it to, you know, break that and run. Took a chance on it, but as you guys know, with the 4-hour zones, they're pretty powerful. And that was an all-time high that was created last week. And we broke through that toward the end of the week. So I haven't remarked that yet. So this zone right here that's red will become yellow at the end of the day. So it'll change to yellow, and then I'll go up and mark the all-time high that was created later in the week. There's really not much to this strategy. The biggest thing is waiting on a candle to close above the high, below the low, and then also is to your stop loss. Where do you put your stop loss? Some people go completely the way it was originally designed to trade any range breakout on any market is that your entry is above the high or below the low and your stop is the opposite side. So the way it was originally designed is, and I'm talking about just a range breakout in general, okay, of any kind. So you find a consolidated sideways movement in the market, you mark the high, you mark the low, and you're going to trade outside that range, and you're going to put your stop on the other side. When it moves up X, ticks, then you're going to move your stop accordingly, like to the halfway point. And then when it moves up X more, you'll move your stop up quarter. And then when it moves your stop more, you'll move to break even. So that's originally what it was designed. Now, the variation of that is based on everybody's trading personality. Some people can't stomach going to the other side, and we'll look at that. So right now, I'm down, I was down about $700 just from my entry to here. And that's about half the box, okay? So if you look from my entry to where my stop is, it was almost triggered. I was down about $700, and that's about half the length from the high to the low. So this would be, if I put my order up here to get in long and put my stop outside the low, that's over $1,400 on 10 contracts. Now, a lot of people can't stomach that. So if you can't, you'd have to go with less contracts. If you're looking going, well, 1,400 is too much, well, then you're not doing 10 contracts. If you do 5 contracts, that'd be a $700 loss. If that's too much, don't do 5 contracts. Okay, now that's originally the way a range breakout works and is set up, is just use the opposite side in case price falls back into that range for a while and then, breaks back out and continues. Now, the variation of that is some people will use the halfway point, and that's what I use. I use that midpoint for my stop, which means if I take a candle close above the high or candle close below the low and put my stop halfway, that's going to be a $700 loss if I use the 10 contracts. Okay? If you use a quarter loss, the quarter point here. So you'd get in long, put your stop not at the halfway point, but a quarter point, well, then that would be $350 on a 10 contracts. Again, if that's too much, go with less contracts. Got a sell signal off Powder Trader Pro. I don't know if that's going to follow through because, again, we're at a red zone. We're at this all-time high that was created early on, and then we broke out of that and came back down to it. So since it's fallen back to it, we'll see if it holds up here. Long wick, once you start seeing long wicks, means the candles price could be turning, especially when you see it multiple candles here. You see all these long wicks here. It fell after that. Then you see a couple long wicks here, kind of indecision here on this doji candle, but then rose after that. So you're going to see that often in these, if you're looking at candles, is long wicks one way or another. So basically, the bearish side of the market's in control here over all these candles and still in control here as it pushed down, but then the bullish side's holding it up. So you got both buyers and sellers in there. And then you got profit takers. So everybody thinks it's just, the buyers and sellers. Well, eventually a seller over here closes his trade. Okay? So that helps fuel the pullbacks. It's not just buyers stepping in, it's also profit taking on the sell side. I don't think too many people actually mention that. So again, with the stop, are you going to, if your entry's there, are you going to use your stop at a quarter point, halfway point, 3/4 point, or all the way across? So I do know that when I back tested, I had seen, I went back and looked. I didn't use, no AI or nothing to go back and back test, no back test program. I physically, manually went back and looked at this, set the tool up and went back and looked at a couple different things. Again, I set it up from 9:30 to 10. I set up a 9:45 line. So I created an indicator that has lines. I don't think it's on right here, Power Trader Pro timelines. So that timeline was created here at 9:45. So when I went back and looked, I was looking at, okay, after this line, did it break and run? Okay, was there a good trade? after the first 15 minutes. So the first 15 minutes I'm looking, I'm seeing this low right here going, okay, did that low get broke and close below it? Yes, it did. Did it run after it? No, it did not. It pulled back and would hit your stop. Bad trade, losing trade. So I saw too many days where that first 15 minutes was broken close past like that, only to have it pull back. And some people say, well, what if you don't take it when it closes past and you wait for it to pull back? Well, like in this case, it basically closed just barely past that line. So what do you call a pullback? Okay, are you waiting for it to, most people wait for it to, come down a little bit and pull back to hit that line, and then they'll sell. So if you're waiting on pullback, where are you selling then? Are you letting it pull back here and selling on these red candles, letting it pull back deeper, selling? I mean, that's the thing. You never know how deep it's going to go. So you just have to set up your rules and make the decision. If it pulls back, do you sell on the first red candle? Then on a pullback, you would have sold there. Still been a loss. Okay, so I just noticed, again, between 9:30 and 10, if you waited, you would not be taken in this. So right now, as far as the ORB strategy goes, we wouldn't be in a trade, okay? We wouldn't be in a trade at all. Now, the only reason, again, I'm in this is because it retraced back, and I'm taking a retracement break here. So it pulled back and almost stopped me out. We'll see where it ends up. I was up a couple hundred. Now, I'm going to consider closing some down here. I should have probably closed some when it popped down. The reason why is I'm looking at the inside of this turn right here. So it pulled down, turn, that's our inside bottom. That's why I said I should have probably went ahead and closed some. I'm too busy talking. It happens. So what I want to do is actually come in and change this to 8. For some reason on this platform, when I come in here and click on that, I don't have an option to customize a trade, and I don't know why. On demo trade or paper trade, whatever you want to call it, you can do that. You can come in here and it says buy, says sell, and then there's a custom, and you click the custom order and you can change it. For me on this platform with this broker, I don't know why that's not the option. So what I had to do is I actually had to come up here and change this to 8 so that when I come down here and click this plus button, now I can do a buy limit of 8. So what that'll do is it'll close out 8 of those 10 contracts. And then I have to adjust my stop here. Just right click and modify. So it's something you do. You can't leave this and walk away, guys. If I left this and walked away and price came down and stopped me out or hit my limit order, closed out 8 contracts, and I had 2 shorts still, but I was away from the computer and price came back up here, those 10, that buy stop of 10 would put on 10 contracts. Well, I'm in short 2, so it would take 2 of those away. I would be in long 8 contracts with no stop. So that's very important to understand and know. This account goes through Trade-Evate, so you can go into Trade-Evate and create orders that are linked together. And what that's going to do is, like it closes out 8 here, it would change this stop to 8 to match. You can create trailing stops when it gets X distance. There's all kinds of stuff you can do there. It's just the platform itself is kind of clunky, the charting. A lot of people don't like it. All right, so we'll see if it goes back down and hits. Like another push down, we'll see. Like I said, I should have closed when it was down near that inside bottom, but too busy talking. That's all right. You'll find a lot of times that happens to me where I'm too busy talking and not watching what's going on, especially when I got 6 different charts up. So again, this is a little different than usual. Normally I've got the 6 instruments up, and I look to trade all 6, and then typically we're getting in to a couple instruments in the morning before the U.S. stock market opens, and then the U.S. stock market switching over to this strategy. It is a strategy that works. It is a strategy you can make money on. So I've had people say, well, why are you abandoning the Power Trader Pro? And it's like, I'm not. I still trade that on all the instruments. However, there were some people that were interested in the ORB strategy. So that's when I went to backtest, look at, and backtested on Nasdaq, ES, Russell, and Dow. And ES actually worked out the best as far as its performance hitting levels. Nasdaq a lot of times went to level 1. And our level 1's down here for the short. And I think that tool's in the way. Right there for the long. I don't want that tool. So those are our two levels. And like I said, a lot of times that's all it goes. Sometimes they'll go past it. But most of the time it would at least get to level 1, not always to level 2. So sometimes it would at least get, the other day it actually went up and did not quite hit level 1, went long, fell back into the zone, the range, and then closed below it, and then almost hit level 1 on the short side, and then pulled back up into that range. So if you wouldn't have pulled partial, that's 2 losses on it, or 2 break evens. It just depends on how you manage your stop loss. I like that we got a wick there. I like that it looks like it's bouncing in my box there. So again, the red zone down here, this is a 4-hour zone, and that is off a 4-hour chart, and it's a swing up. So price went up, and then price fell, and then I'm taking that top of that swing, okay? And that's what I'm marking as the high. So again, price goes up, price comes down, okay? And then doesn't really matter what after that. I'm taking and I'm marking I'm typically using a wick, if there is one, and taking and marking from the wick of that swing to like a candle body down here. So it could be the same candle, it could be the candle next to it, but that's what we're marking as a 4-hour zone right there. Okay, so that's where this zone came from. It was a push up, creating an all-time high, push back, and that's the top of that is what this red zone is off of. So the 4-hour zones are strong, and they tend to hold up. Now, eventually, price will go through. It's not magic. It's not something that it always freezes. So again, see where I said, remember I said I should have closed there, but too busy talking. So I thought it would push back down on this candle, didn't. So it still might turn into a losing trade. I think we said we'd lose about 700 on this, or I would. It's not always easy to know what to do in the middle of the zones. So a lot of people don't trade that. Like I said, I thought I had a shot. Power Trader had red. The only thing that, and everything, the higher time frames are all red. It moved short, pulled back. So on this pullback, I had that red candle break. I thought, okay, this is great. I'll go ahead and sell. And again, my caution was the red zone. So that's why I only went in with 10 instead of 20, went in half the size, and it may not work out. But I had my reasons for taking it. And that's about the best you can do. It should be analytical. You should have thought process. You should have your rules for getting in. Again, I had several reasons. It retraced back. It popped down, red candle. When it retraced back, it retraced back over to the inside of this swing high here. So I'm like, okay, I'll go ahead and short it. Had my reasons, shorted it. Will it work out? I don't know. So far, it hasn't done much of nothing. We got a couple more sell signals on the Power Trader Pro, and that's because the lower time frame here turned to green as it retraced back. So as it pulls back up, you'll see the lower time frame's green, and then it flips back to red. And when it flips back to red, that lower time frame realigns with the other two, and that's why you get that sell signal. I've thought about changing it. If you look down here, since I'm on the 1 minute, I have one dot here, and then it went back to green, and it then went red again. That's why we have two here. I've thought about changing it to where it has to have two on this smaller time frame, but that's only if it's on a 1 minute chart. I don't want to change it by default overall, because if it's on a 3 minute time frame, you really don't want to wait for two of these dots on a 3 minute before that sell signal goes. So if I change the coding or work on the coding, it's going to be that only if you're on a 1 minute time frame, it will wait two dots to give you that that new signal. Of course, in this case, which means it would come at that candle. So there's really not much to do other than wait. So this has been back tested by a lot of people. There's a lot of variations. I saw someone the other day, or actually it was about a month ago, when I was looking at this for a couple people. Someone was trading the 5 minute time frame, the first 5 minutes. So they're looking at the first 5 minutes as a range. To me, 5 minutes does not create a range. You're basically, I would not call that a range. You're trading the opening candle breakout is what you're doing. So those people that were, they're down and they're looking at the first 5 minute candle, okay, which would be 1, 2, 3, 4, 5. So this would be your low right here, okay, and then that would be your high up here. Let's see. So that would be your 5 minute candle. So if I went to a 5 minute chart, basically they're letting the first 5 minutes open, letting the market open. Stock market opens 9:30. So they're marking the 9:35 candle. So they'll go to a 5 minute time frame, mark the high low. You could be down on a 1 minute, whatever. It's going to be on a 1 minute chart like this. You're going to have 5 candles. That's going to be your high. That's going to be your low. And they're trading when it breaks that and closes below it, which that would be your entry. So this candle closes up inside there. This candle right here would be the close past that, and that's what they're taking. Okay. Again, if you went with your stop, and this is something you have to look at when you analyze something. Look at where, if your stop is halfway in that box, which would be here. Okay, halfway. So what if your stop was there? Look at if you put your stop 3/4 of the way, and then also look at your stop if you got in that trade and put your stop about 1/4 of the way, okay, which would be somewhere in there. I'm not going to measure it, but the quarter would be, of course, halfway between the halfway point of the box and here. So somewhere in there. So I'm not going to say you would have been taken out here. You probably would have been almost taken out. So again, as I was back testing, that's something I looked at. How often would your stop be taken out if you did the quarter stop or the half stop or 3/4 stop, or even yet go all the way? I tend to saw when it went all the way back that it changed. It's a full change in direction. and it would at least go to level 1. So that took out this one and this one. Oh, not that, sorry. Took out that stop and that's, why is it not clicking? So it's highlighting it. There we go. That stop. So then you're stuck looking at the quarter stop or the half stop. And most of the time I saw that the half stop was a better option. But you had been in on this candle, okay, and then it went, but then it turned around. And I don't know if it went to level 1. We'd have to take and adjust this, and I can do that real quick. So what I'm going to do is I'm going to adjust this. We got time to play around. And take and adjust the tool to where it just marks the first 5-minute candle, just to show you the difference. And we'll look at the first 15. So I'm going to come in and just set this to 9:35. Will it not let? I think I just got to manually put it in here. It should let me, I hope. 9:35. There we go. So there's 9:35. So that is adjusting the range breakout tool for the first 5 minutes. And that's what it looks like right now. So again, you know, this would have been your entry, and I already have the stops there. That would be your half stop, you know, and then there's your quarter stop. So you would have almost been taken out, but still been in. Now, as you see, it still didn't get to level 1. And then it pulled back and you'd be stopped out. So this all right here, is it going to be a full stop loss for you or not? Depends on how you move, if you move your stop. So as it moves to level 1, if you moved your quarter stop closer to break even, you know, not quite to break even because that's tight, then you would have been stopped out less. Okay? If you had your stop at a halfway point, and you moved your stop to the quarter stop level when it moved down toward level 1, well, again, less of a loss, right? And that's what we want. That is just as good as taking a profitable trade. Less loss. I know so many people are like, well, I still took a loss. Okay. But did you manage your stop? Did you manage the trade? Did you have less of a loss? Okay. So that'd be how it looks if you took the 5-minute. And you would have to go back, and this tool is by LuxAlgo, and you can actually go back and turn historical data on, and that turns the data all the way back. Okay, so I'll show you this. So that takes the historic data all the way back. Let's go to 3-minute. Let's shut off the indicator. So that goes back and takes this. Where's it at? I got to leave that other indicator on. All right, we're going to have to turn the Power Trader Pro thing off. All right, so you'll see how it marks the whole day. Okay, marks the whole day. So what I like to do is just look at the U.S. market. So come down to your platform here and change this from electronic trading hours to regular trading hours. And what you're going to see is you're only going to see from 9:30 in the morning to the end of the day, 4. That's it. You're going to see the stock market, just the trading hours on Nasdaq. So this is an easy way to go back and backtest it, okay? You can easily go back and look at this day and say, well, there was a sell signal, and we would have taken that, okay, short, and it only touched level 1. So as long as you had your close partial, you had a buy limit order there to close part of your trade, and then you may or may not have moved your stop. That'd have been a profitable trade. Same over here. Closed above the high, use the halfway point. It goes up and hits level 1 quickly. Okay, close out part of your trade, move your stop to a quarter point, and then it comes up here to profit. You've probably moved your stop again. Yes, you're going to miss out on some of this because of the big pullback. So you go back and you look. That's how you go back and you can back test. You can zoom in and look. So that is one good thing about having that tool is, again, because you can quickly go back and look at these days and look and see how it did. You yourself can go in and look at it because right now we have it again the first 5 minutes. Okay, so then come in here and change it to 45. Look at the first 15 minutes. Okay, what's the difference? Would it be better to wait the first 15 minutes? Okay, go in and change it back to the first half hour. There's some people that wait an hour before they trade. So that's how you want to use that tool. Again, you can drop it on your chart and then change it over. This is the quickest way to backtest, so you're not scrolling your chart through, like from 4 o'clock p.m. to 9:30 in the morning. Okay? If you have this on electronic trading hours, you literally have to scroll as you're scrolling through the chart to look at the back data. You have to sit here and scroll through, again, 4 p.m. to 9:30 the next morning with that on. So if you change it again to regular trading hours, it's a lot easier to go through and analyze. All right. Now, I like to have this. I shut off historical data when we're doing a current day. I know this zone looks like it's way out there, but don't forget it's off the 4-hour time frame. So it was taken that high, and then a candle close is what it's from. So we get down on the smaller time frame, it looks a little different. Let's go back to the 1 minute time frame. So we're back in the negative. We were in the positive a little. And with this tool, it does scrunch your chart in when these pop up. So when level 1 pops up, on both sides, it does shrink your chart down, because the chart was like this. And then when those pop up, as soon as this candle hits, you'll get this new zone pop up with the level 1 on each side. And then what it does is it pops the chart down like that. So you can always change that, move it up. I'm going to turn the Pro back on. So again, you can look at that yourself. Well, do you want to wait 5? I've seen people wait 5 minutes, and they're normally not going for a lot of money or a big distance. So it's okay. It would work sometimes, and sometimes it won't. They all will. It doesn't matter what time frame you pick. So the thing is to go back, look at the different time frames, decide on which one you want to do. Do you want to wait the first 5 minutes? Do you want to wait the first 15 or half an hour? Or do you want to wait the first hour before you trade? We expect to have heavy volume, and you can go back and look at volume. You should have volume up on your chart always at the top, and just scroll over the candles and look to see, how much volume has stepped in on those candles. Okay, how much volume do we have there compared to where we're at here? You can scroll across the candles, see the volume change up here. So it's good to look and see what kind of volume do we have in the first, whatever you trade, the first 5 minutes of trading or 15 minutes, whatever you're waiting on. So we're getting nice up and down action. It just does not want to go past here on these lows. I think what I'm going to have to do, and that's what I was afraid of. So you notice I put my buy limit below this. I basically put it right at that line that I put as my inside bottom. And I was hoping it would at least tick down there. And you'll notice this wick here fell shy of coming down there. This wick here fell shy of coming down there. So is that what we're going to see now? So I have to make a decision, because here it is, what? 10:45. So we're already over an hour into the market. Haven't gotten much action. And I have to decide. And don't forget, non-farm payrolls Thursday this week, not Friday, because of the 4th of July. So they've moved it up a day because Friday's a U.S. bank holiday. So I have to decide, do I want to slide my order up here? And yes, that's less of a profit. Or do I want to leave it where it is, hoping it'll push a couple ticks below and take out my partial? Is that it? As we look at these lows, these wicks, you know, this one didn't hit the inside bottom. This one here didn't even hit that low. This low here didn't even hit that low. The low of the candle we have right here didn't hit that one. So every time it's pushed, we've had a weaker push to the downside. So should I have just moved that up and let it close? Or when it was down there, should I have just went ahead and closed partial? Because so far I've set in a lot of negative on this one so far. In positive for a little bit, back in negative. Positive for a little bit, back in negative. So I would love to see it pull up here and fail to go above this high. I don't. So when we draw trend lines on the lower time frame, keep in mind that they get broke often. So I don't expect the 1 minute trend lines to hold up. So what I'm looking at is just drawing a line across, you know, from this top here to this top, and we see that it respected it here. I'm looking to see if that might happen again. You know, as it's pulling up, is it going to bounce there and then give us a push? Is it going to get pinched out and finally go short? That would be great for my trade. So I'm going to look to the left and see, you know, what happens if I take this and move it back up to a point there. What does that trend line look like? I can either move it back or I can extend it to the left. So see, if I extend it to the left and have it on those points, it actually cuts through these candles. So let's turn that off, because then I know, since it cuts through these candles, I know if I take this point here, this point A, and move it back here, that's going to change the look of where it is now. I'm going to actually have to adjust this level, this point B, over to here. Okay. So I'm just looking for some confirmation. Is it gonna, you know, so here's where I had it, you know, from here to here, and then adjusting it back to this high, you know, is it going to break through or not? It's wicked past here. So when it came up and wicked past, but then it had an extension, it had a push, that's when we can move our trend line to that wick. I need to turn the magnet on. So you only move it after you've had it, once it pulls up, it can break a trend line or trade line, but once it pushes back down, in this case, then you can move that. So I don't know if that's going to hold up. So it's kind of that flag formation right now as it's gotten tighter. Definitely not wanting to make lows in here, any lower lows as we've seen, but it has made lower highs. And these are really higher lows, just barely higher, just wicking down there and just going down to touch it. So I'll hold the trade. We'll see what happens. Was really hoping it would break and pop to the short side, but again, we got a 4-hour zone there, so that's the high that was created on that 4-hour time frame that it fell off of. So again, on that, we're talking a 4-hour chart. I need to turn that off. So we're talking again a 4-hour chart where price went up and then price fell. Okay. And that 4-hour chart, that swing, you want to look at those 4-hour time frames and go up and mark again from, you're going to mark the wicks. That's what you're going to do. Let's see. There's a way to draw that. Is that this? Okay. So again, you're going to look at those candles on that 4-hour time frame, and you see a big swing up, you see a swing down on a 4-hour. You're going to come in and take your zone tool, a box tool, and draw it from a wick, whichever wick high is here, okay? And then find a candle body is what you want to do. Now I can use either this candle, the red one here, that body, or I can come down here and use the body of this, If it's a super small candle like a doji, I would actually use the whole candle like that. Okay, but we're looking at the 4-hour time frame, and then just drawing that box, extending it to the right, and then labeling it. This is why this one was red, because it was an upper zone. Okay, so we have the upper zone. If it was the reverse of this on the downside, we would do a green zone, which would be our lower zone. And then we have a mid zone. So the mid zone is anything in between the upper and lower. And then I actually have one for a lower time frame, which is gray. So I mark them yellow, red, and green on the 4-hour time frame. If they're down on a 1 hour or 15-minute, they're going to be gray. It just means lower time frame is where I got that box. And then we actually have a range trade box. So that's if we're prices moving up and down and up and down, and we can trade that range. Okay, so price is bouncing in here and it's formed a range, then we would trade from the bottom to the top and then trade from the top back down to the bottom is how you're going to do that. I don't know why those candles are looking like that. I don't know why it draws them the way it does. But that's how you draw the range tool. So right now, again, this one's red, and I'm leaving it red today because that was a new all-time high. So I'm looking to, as it fell back to the new all-time high, and we have a new one now. We can go out to the 4-hour and draw that. We'll do that here in a second. This one's going to become yellow today. So I wanted to leave it red during this session, just because I wanted you to see how powerful the zones are. And as you can see, it's failed to drop down in there. So I don't know if the sell side's going to stay heavy, and we're going to see. I mean, we've got low volume. We got very, very low volume. So we haven't had really any volume this morning. Let's see here. So we'll pop to the 4-hour, and we'll do that real quick. We'll look at that higher zone. And as you see, this, again, the red zone was drawn from back here, and I did draw it from the wick. So again, we had a huge swing up. The other zone was down in here. So this used to be a red zone, and it broke above, came down, tested it, bounced right there around the middle of the zone, and then popped up off the 4-hour time frame. So we leave that zone on there, okay? And then it came up here and then pulled down. So these 3 candles here came up and created a high. On the smaller time frame, we were then trading it short as it bounced there. Well, it fell quite a bit. So this wick right here is about 50%. It's about 50%, just visually, roughly. It might not be quite that. It might be 45. But I think it's around 50% of this climb, okay, from this zone to the top here. So that's about 50% of that move, okay? So that was our high. That was our red zone. That's the one we recently came up and broke on the 4-hour. And, of course, we're down on the 3-minute trading. And then now we have the new one. So these are going to be bigger zones because we have the big wick. And if you don't like the big zone like that, then you have to drop to a smaller time frame. And I'll do that. So let's go ahead and change this to yellow. I'm going to leave it red for now, actually. I was going to leave it red till the end of today to see how price respected. So we have the new top zone. If you don't like the big zones like this, you can always drop to the 1 hour and look and see, and then still take the high, okay, which is the candle we're on. This is the high. And then you'll take and move this to this body here, okay, where this came up and turned. You want to anchor it to a body. So I'm fine with that. That's going to give you a little smaller zone. And that's a personal choice. To use the whole zone on the 4 hour, typically that's what I'll use. I'm going to mark the whole wick again on a 4 hour. So that would be the zone. And it's going to tend to be bigger sometimes on these big moves like this. But again, if you don't like the big zones, you can adjust it down, go down to a 1 hour, and then now how we have 1 hour bodies here. Then we would adjust the zone to that body. And you would just have to know that it may not get all the way up there. If I did that, if I adjusted that zone, I'm going to come in here and I'm going to do a line at that body. Because remember, that is where the box was. So again, if we go to the 4 hour time frame, our box is from that wick high to this body, okay, of this candle. That's where the box is. If I want a smaller box, go down to a 1 hour. We're going to look. Now we have candle body up here. 1 hour. We can move the bottom of this box to that body. Okay, I guess I should have the magnet on for this. So we're going to move that up, and we're going to have this box there. If I do that, I'm going to come in. That's why you'll see these where I take the horizontal ray tool, and it says 4 hour. Okay, I need to mark that level because after all, that was this right here. That's where the candle body closed here and turned. Okay, even though the bullish side of the market was still kicking in, it went up. Bearish side of the market kicking down. That's where the candle body closed. I need to be aware of that on the smaller time frame. So again, I'm all for it. If you don't like the big zones, go down to a 1 hour and mark it. But don't forget where that 4 hour level was, because that may be the highest it gets. It may only get to that 4 hour level. Okay, because again, trading with the 4 hour time frames, trading with the big boys, right? So let's go back down to a 1. So now we have our new red zone, and then as you're down on the 3-minute time frame trading, you'll notice that what? We notice that that zone, that 4 hour mark, is where? Right above the range breakout today. Okay, so again, looking at all that, when you're trading, today's not a great day. It's between two highs on a 4 hour time frame is where we're at. Okay, we're between the old high here from the 4 hour time frame, and we're between the new one that it just created toward the end of last week. So we are between those. So now when looking at that, does it surprise you why we haven't moved? It shouldn't. When you look at all this and you calculate and look at the 4 hour time frame and where you're at, are you now surprised at where price is and why it hasn't fallen? I already mentioned over here when I got in short that I wasn't expecting it to go down through this level. Took a chance on it, and again, that was here on the 1 minute. So I took a chance here when it broke the retracement line, gave a red candle. I thought, okay, I'll go ahead and take it. We'll take a chance. But I knew full well that it may not go through that zone. And look at the problem it's having. It is really severely thinned out, tightened. It's going to pop one way or another. So we're in that time push, what I call it. Okay, so it is pushing sideways because no volume is stepping in to take it to the high side or low side. We don't have bullish volume. We don't have bearish volume. Nobody's stepping in. And it has nowhere to go but sideways based on time. It has to keep ticking away. So this is what I call a time push. And we have the our downward trade line. And we also have these lows in here. And it's going to pop one way or another. Sometimes it'll pop to the high side. Sometimes it'll pop to the low side. Sometimes it'll pop to the high side and pop up here, which might take me out, and then go back into that level and then go to the low side. There's no guarantee of any So we just got to kind of write it out. That's why we're trading with the Power Trader Pro, and I'm going to hold short as long as these higher time frames stay red. As long as that bottom time frame stays red, I want to hold short and trade short. It's just nothing stepped in right now, guys. So we're just going to wait it out. But now when you look at it, look at those two red zones. And since this is such a strong zone here, this red one, if it breaks to the high side and we do happen to create another all-time high, I may actually change this one to green as my lower main zone. If it's a stronger level than a regular mid zone, then I can make it green, as long as price is above it. Because then we would look for it to pull to it and bounce. That depends on if we get a bounce here today. So again, the sell signals are going to come up every time the lower time frame here turns green and then shifts back to red. As long as the bottom two are red, it'll re-trigger a sell. I'm going to have more of them on this chart because I'm on a 1 minute than on a 3. If I go to a 3, and that's normally what we're trading on, you'll only see 2 of those, okay? So that's the difference. You got to kind of watch the signals on a 1 minute. You can take them, but you're going to get more of them. I like to blow the chart up because remember, level 1's there, they're going to change that. There, we're back in the negative a little. So we're just waiting to see if it pops. Be nice if it does. It's already 11 o'clock, so we're already an hour and a half into the market. Let's do something real quick. I'm going to pop to, let's check ES and see what ES looks like on all this. There's ES. Okay, so there's its high and its low. The first, we're waiting the first half hour. Again, if we adjusted that, then we would go to 945. So we'd be looking at that as the high. This is the low. And a break below that low, which that candle right there actually starts out below it. I don't think you get in on that because, again, that's a bullish candle. We want to see a bearish candle break below. So this candle goes down. It looks like it closes right around that price point. It might close a little bit below. I don't know if you'd take that. But this one, the candle started. It looks like it pushed down, pushed up. So it looks like it started, kind of jumped down when it opened. You're not going to take that. You're going to wait for a red candle close. So more likely you'd take this one because it closes below the low. If you did a half stop, you were out. Or no, sorry. Because we'd adjust the low here if you're looking at the first 15 minutes. So again, as you're going through and backtesting, that's what you want to look at. So if you're trading the first 15 minutes, there's a red candle close below. Your stop would be at the halfway point, but yet the halfway point's like, let me turn that off. The halfway point between that area and here is probably in that high around in there. So you would have almost been wicked out, but not, and then it did go down. So again, profiting, it just depends on where you, how you decide to manage your stop. Let's look at Dow here. There's Dow. There's the first half hour. It broke and closed. And if you took the broke and close, there's your signal, your sell signal right there. It didn't pull back as much. Okay. So I liked the Dow in the testing. Russell was the one that did the worst. So as far as the back testing, ES did better than Nasdaq. And then it was ES number 1, Nasdaq 2, Dow 3, and Russell came in last for the 4 indices. So that should be something to keep in mind. A lot of people go Nasdaq only because of its popularity. It does have a lot more volume, and that's what everybody out there on YouTube, Instagram, TikTok, all that is trading Nasdaq. So you'll see a lot of new people jumping in Nasdaq. So it's very popular to trade. It does have a lot more volume. So overall, though, when you look at every one of these, there's Nasdaq. Okay, waiting the first half hour. You still wouldn't be in. Here's our high. Here's our low. You would not be in Nasdaq at all. Here's the ES. You wouldn't be in. No, there's no sell signal up here. There's no buy signal down here. So as far as the opening range breakout strategy, you're not in. Now, when it comes to Dow, here's your sell signal. There's a close below the low. If you're taking that signal, you'd be in. Look at the different levels. If you used your stop here, let me grab this one. So if you had your stop up here, let me get a stop marker on there. So if you got in on that sell signal and put your stop here, okay, you'd be in the negative for a while. It did go to level 1 and close past it. It did touch it here. Okay. If you had your stop at the midpoint, halfway between your entry and this stop, halfway between that low, opening range low, that's about the halfway point. That's about midpoint between the low and the midpoint of the whole range. That's about half that. So if you got in there and did the midpoint, you were out. I mean, you're out quickly. That candle, that right here. So you would have got in a couple candles later. And it depends, again, are you using a 1 minute and getting in when a 1 minute candle closes, or a 3 or 5? I'm down on a 1 for this. Okay. Ultimately, though, it does go to level 1. I'm not going to say a trader's worst nightmare, but you hate seeing it. You hate seeing it where you're taken out only for it to go in the direction that you trade. Okay. So far, again, looking at all three of those, you got Nasdaq, you wouldn't be in. You got S&P, you wouldn't be in on that either. You have Dow, where you would have shorted. It did go to level 1. I'm using the halfway point. And then we look at Russell. Here's Russell. So Russell, there's its low and a high and low. This candle went down and closed. That's a big red candle, big bearish candle. Most people aren't going to take that as a signal. You're going to wait for it to pull back and take an entry. So when it pulls back and gives you this red candle bounce, a lot of people are going to take that. They're going to take that pullback to the low and look for a red candle. I always look for red candle. I like to see a red candle if I'm going short. I like to see a green candle if I'm going long. So I'm not big on putting on and people do, big red candle. They say, okay, I don't want to take that. It's too close to profit level 1. If it pulls back, I'll take the trade. So some people will put that sell limit up here, and then when price comes up, it'll automatically sell, put them in. Others will wait for a candle to close red, which would be this one. And you're going to get in. If you used your stop level, okay, so if you took this, we'll copy one of these. If you had your stop level at the halfway point, okay, getting in on the red candle, or even if you got in down here, then you're still in the trade, okay? If you used your stop level, if you took that red candle entry or the other, either or, and used a quarter stop, okay, and the quarter stop is going to be halfway between the low and the midpoint, so use a quarter stop, you're out, Okay, you would have been out when this pulled back. Either trade, either taking that entry, you'd be out, and then you'd be in again. So you'd be in again when this candle closed below this, below the low. So you're in again. And if you used a quarter stop again, you're out again. If you took this other signal, okay, you'd be in and out again. If you use the half stop level on this entry, it's just another trade. But I don't recommend taking them until you profit on the first one. Okay. And so far it's breaking it again. So again, that's how you want to look back and analyze these. Don't just look back and see, okay, it breaks, it goes level 1, it goes level 2. Look at your stops. Because, you have to figure out where you're going to put your stop. Everybody's risk tolerance is different, okay? So you yourself, you're the only one that can answer that question. I can show you all the data in the world. So we've looked back and tested, and from my testing, manually, physically, and again, a lot of the back testing software doesn't actually give you accurate pulled data. You'd like to think it would, but it doesn't. The best way to do it is use your own eyes and go back and manually look, because here's why. You yourself are going to have to be looking at it in the future. You yourself are going to have to come in tomorrow. If this is what you trade, you're going to have to come in tomorrow and trade it. You have to come in the next day and trade it, the next day and trade it. Okay, so someone mentions the ORB strategy, the ORB strategy to you, and they wait the first 15 minutes. And they say, well, I've back tested and it's done this. Okay, great. You have some data, but you need to go look at that yourself. And you need to look at it and see, how does that look to me? Okay. And again, that's what I did with it. So it works. It doesn't work all the time. You're going to have losing days. And I've mentioned that before, where when I back tested it, I was trading a 3-minute time frame, taking all the signals. If I had a red triangle, I'm selling. If I had green, I'm buying. So between 10 o'clock, set it up from 9:30 to 10. 9:30 to 10, it marks the high-low. If you get a signal, you're going to take the trade. Between 10 and noon, you take every signal. So that was my plan. Between 10 and noon, I'm going to take every signal. However, and I'm taking every signal if I'm losing. So if it has a sell here, I'm selling. If I lose, if it has another sell, I'm selling. I'm going to take each signal from 10 to noon every day. If I have a winning trade, I can choose to not trade another signal, because that's what we're looking for. We're looking for a winning day. We're looking for a winning trade. We're looking for a winning day. So I'm going to take every signal between 10 and noon. The only break in that would be is if I take a trade, I have a winning trade, well then I can cut loose. I can cut out for the day and just be done. If I have nothing but losing trades, if I don't have at least one winning trade in the morning, because I could have a win and decide to trade another signal and have a loss, or I could have a loss first trade and then take a win, and it can make up half or part or all of the loss. So as long as I have no winning trades from 10 to noon, then what I do is you can trade after noon to 4. Take one more signal, because if it moves sideways the first couple hours, a lot of times it will break out and run in the afternoon. So far, several power trader sell signals. It's moved past the low again on Russell. So far, Russell, it gave signal, but hasn't hit level 1. Okay, Dow, you had a trade signal. It did hit level 1 down here. Okay. ES, no trade. Still no trade. And Nasdaq, we're still sideways. Still no trade on Nasdaq on this. So if I wouldn't have taken this trade, we'd still not been in this today. Take some of these stops off here. I should have left the inside top there. We got our stop mark. I'd like it to see it did go pop profit. So now we hit some profit. But look at where it went. It just barely went past that inside bottom. Just barely wicked down, took me out. So we did close out 8. I'm going to pull a report here and see what we locked in. Is that it? Oh, NQ 192. Okay. So I got 192 on that. Not a lot. It's positive on the day. So we'll go ahead and mark that. So 192 and not 492. We would have liked to have had that, right? All right, so we got 192 on it. Since it's pushing past these lows, remember I told you it was going to break one way or another. It did break out through that. And I mentioned that. It could pop up and take me out and then push to the downside. So, it didn't. So glad I had my stop where it was. And again, I didn't use the midpoint because my entry was here. Okay. So if I take my tool, we're lopsided from where I took profit. So I didn't even get 1-to-1 on those 8. But again, I set that limit order there because that's where my inside top was, or bottom, this swing here. So you have a swing down, swing back up, the inside of that swing. The bottom of that swing is going to be your low, okay? And then the inside of that turn, that swing, that's going to be your inside top. I don't like marking the dojis. The reason this line here is not from that doji, it's back from this low. So that's why I marked this one as my inside top. And that's basically a morning star right there too. So knowing that it might not get past that level, again, that's why I set that. And that's the only reason why I set that level there. So that's why we're upside down right now. So I need to change this. We're going to modify this to 2 contracts. And then I am going to adjust my stop. I just have to decide where to go. So we have these highs in here. Typically, I'm going to want to use a high from there. So I'd want to come down and stay above that. And then it's just, where do you go? I mean, do I stay here, which is above this high, in case it comes back to test it? Where I was here was above that high, barely. Do I just leave it there? You know, do we come in here where we're, above this high still? Just know that we can be wicked out at any point. Or do we just, like I said, do we leave it here? And just say I'm willing to take that loss against the gains. 32. We'd give back almost all. I mean, we'd give back a lot. We'd give back almost all of what we locked in on that trade if I leave it where it is. So now if I'm okay with that and could care less what I make on the day. So if I'm like, okay, I'm just going to leave my stop where it is. If it goes back and stops me out, I'm not going to make anything. I'm going to lose back what I locked in because I'm taking the chance that it's going to finally push through that red zone. Okay. The other thing is on the Power Trade Pro indicator, it has a trailing stop tool. And you could put that on as well. And you have to change the number. The trailing stop tool is just, I have some numbers in there by default, and it is not set up to any particular chart. You can't take this as trade signals. It's not trade signals, so don't, as I put this on, don't think it's trade signals. What I have to do in turning that on, notice how I keep getting sells, but it's blue. I need to adjust it to where there's no blue line. We're having nothing but sells. So I need to adjust it to where there's no blue line. It's all orange. And you want it to switch back here. I want it, see how it's blue back here and switches to orange on this sell? I want that to happen still because we had a buy on back there. So, but I need to take this blue out. The only way to do that is to go in and change the numbers. Plus, I'm down on a 1 minute time frame, so that's going to change what it looks like. Okay, so I need it to go wider. So if I went with the 6, notice how it's way up here now, and it's all orange. So I want it tighter. I'm going to go to a 5. Okay, and just tick out of the way. You could just change the number and tick somewhere else out of the box. So let's change it to a 4 because it started out as a 3. So there's a 4. Again, if I go down to a 3, it changes. So let's try 3.5. I'll go half levels. And there's 3.5. So 3.5, I could see that price wicked past the line there and price stayed here. So I'd be comfortable using that as my tight trail. Okay? So what I would do is pick these flat plateau areas. You basically want to go in between them. Now these are kind of tight because I'm on a 1 minute time frame. If I move it up like this, it's a little wider. But basically you're looking at the flat plateau area. You're looking at 2 of those levels and going between. So like here, and you would have your stop between those levels. Okay? Now we have here and here. So instead of going between them, I would just move it down toward that 1. We have a flat plateau area here and here. So I'd trail my stop, moving it between those levels. We have a flat plateau area here and here. I would again trail between those levels. I don't like going right on the level like that. Okay? Right on it because of this. Because of the wicks that pop through. So it would be here. And you look at this flat plateau area. You have this one, you have this one. Well, do you really seriously want to go like that between the two? Because again, you look back at the wick and you're like, I might be taken out. So I'm just going to leave it there till we get another push. So I'd be comfortable trailing my stop that way. And that's what we'll leave for the rest of the session here. Got about half hour before noon. I was really hoping it would break for us, but let's look at the others. There's ES. I guess I really don't need this sidebar on. So we got S&P. Still has not broken signaled. There we have Dow, and it's pulled back up. Again, we have to adjust it to each instrument. So the trail, you cannot set it up on one instrument, and it stays that set up for all instruments. You can't. It's individualized based on that instrument, and you have to adjust it so where you get the lines off the highs and lows. So you got to ignore that on these other ones as we're looking. So there's our Russell. So Russell broke back through, and so we had a sell over here, signal off the indicator. You'd get in. As long as you had your stop at the halfway point, you're still in. You're in profit right now. If you got in here, you're still in the negative a little. If you would have taken, like it pulled back and bounced, okay, you would have been in positive right now, or if you took when it broke back through positive, any one of those entries. As long as you had your stop at the halfway point, you're still in, okay? It has not gone to level 1. So far, that is a okay trade. You're in it. Again, depending on if you got in there, there, or after the pullback and it broke back through, you got in. When does it signal again? So notice we have a triangle here. Okay, that's on this candle breaking. But notice when it pulled back in and it broke here, back through on this candle, there is no signal up here. Now, why is that? I'm going to tell you why. So we have no signal up here when this candle breaks back through because it doesn't go past the halfway point. That's how this indicator's set up. And I've been looking at changing that to where if we have the price break out and it pulls back at least quarter of the way for it to re-signal here. And you would get another sell here. It pulls back here a quarter, because either this pullback or this candle definitely is past a quarter of the move. You would have got another signal here. So you'd have 3 short signals on there. So, but it actually will not signal until price goes past the halfway point and then comes back through is what it waits on. Okay. I got a buy signal on the Dow here against the orb. So it might pull all the way to the top. All right. So we're still sitting negative a little bit on our 2. And we'll probably cut out of the video here at noon. We'll watch it for the next half hour, see what happens. So again, with the trail, you completely adjust it after you're in. I will get in a trade on a signal. I will adjust it, the trail, as you see it bounce, and you need to make sure that it's all the same color. So we're getting sells, sell, 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 sell. We want that to be orange to match. So again, we had to adjust it from 3, I think it was 3 to 3.5. And again, you have to do that for every one of them. So again, if I was waiting on the orb strategy today, I would not be in a trade. If I was just trading Nasdaq and looking for the ORB breakout, I wouldn't be in a trade right now. So again, the only reason I'm in a trade is because I took this right here, this candle break above my breaking my retracement line. And don't forget, we were almost stopped out. So this is a big upside down trade so far. And that is one thing I noticed. So I guess I should talk on that. So that's one thing I noticed with the ORB strategy is a lot of people will try and go, like 2 to 1 or 1 to 1. You see our level here. This is level 1. Okay. So if price goes and breaks and you get in and you have your stop at a half stop loss, and that's level 1. That level 1 is the same distance as the halfway point. So if you get in when a candle closes below the low, put your stop at the halfway point. This level 1, this first target, is the same distance from the low to the halfway point. Okay? So if you're pulling partials there, a lot of times you're not quite at 1 to 1. So you say to yourself, well, let's go 2 to 1. Let's go on out to level 2. Well, the problem with that is, again, if you go back and look and backtest, a lot of times Nasdaq doesn't go to level 2. A lot of times it'll barely get to 1. And if you're lucky enough for it to go past 1, a lot of times it does not hit level 2. So just something to keep in mind. Pull that off. So we'll see if we get a push here. Another sell signal. We'll see if it gives us that push. It's hitting the back of that down trade line here. So again, a lot of times you're going to be upside down on this as far as your risk to reward. It is not the best strategy for risk to reward. If you're pulling it 1-to-1. Just keep that in mind. But again, like I said, a lot of times that's all it goes. And you can go back and look and back test. Yeah, see, not any of them except for Dow here. Dow went 1-to-1, and your sell signal's way back here. So same thing. You would have been sitting in for quite a while, negative, positive, negative, then finally positive the whole time here, and it finally comes down and closes past that first level, but does not go beyond it. So the only way you'd be in profit, and you'd be out now, I don't care who you are, you're out, unless you have your stop clear up here on the other side. So as it moves here toward level 1, you would have that buy limit order, right? You're in short. You could have a buy limit 10, let's say. You could have a buy limit order for 8 or 9. It closes out 9 for you. You move your stop. So as it hits level 1, I like to move my stop. Okay, when it closes out partial. And then when it comes down to a next level, I will only close out if a candle closes past level 2. Okay? So as price moves down, a candle has to close below level 2, and then I'm gonna take that stop, and I can trail 1 level back if that's what I want, and move it to 1. But I need to see a candle close, because if a candle doesn't close past level 2, a lot of times it'll bounce and it'll pull back up above level 1 and then keep going. So again, it's up to you to decide how you're going to manage your stop. So again, we'd have our stop here, half stop. It moves to level 1, closes out partial. You have to decide, are you just going to move your stop here, to a quarter stop, and be willing to lose a little bit back of your gains, waiting on a candle to close on the other side? And it did. Candle closed past 1. So would you move your stop to break even, which would be here, and then you're stopped out? Okay. So you'd have 10 contracts on. I'm just using that as an example. I don't care if it's 5 contracts on, you close 4, 10 contracts on, you close 8 or 9, 10 contracts on, you close 8 is what I like to do. So I would, we would have closed 8, moved our stop to the quarter stop. So we're minimizing our potential loss against our gains we locked in. And then when it comes down and closes here past level 1, we'd move our stop to break even, which would be here. And then we just would be stopped out on our runners. So that would have been a good trade overall if you did it on Dow. So again, overall, it was S&P, Nasdaq, Dow, and then Russell in that order. Yeah, so everything's pulling back. So we're going to get pulled back and hit our stop. So we're going to lose back. Everything across the board right now is pulling back. So I'd expect to get stopped out. So I used the trail for my stop on this one. And so I got to move it down a little bit. So that minimized some of the loss I'm getting against the 192 gain. Where it's 60. I don't know if it's going to hit me or not. But ultimately, what I have to look at the end of the day is this right here. This was my stop. So at the end of today, I want to see. So if price comes back and stops me out here and I lose, does it hit this level? Does it go all the way up and hit that stop? If the answer is yes, then I did good by moving my stop off the trail. If the answer is no, if the answer is it comes back to stop me out, only to keep going short, turn and go short, but does not hit this original stop level, then your thought process needs to be, if I would have left my stop alone, I'd still be in it in this case. So again, you have to decide that, how and when you're going to move your stops. For me right now, it's pulled back. and it's hitting these levels in here. So, which again is marked from way back over here as well. This inside top originally. That's the original inside top where it pulled back here and pushed down, and I marked the bottom of this green candle. So that's what we hit. That's what we're testing. We're seeing if we can go above any of these highs back here. I might stay in it. We'll see. What's going to happen though is as it turns, if it goes down, it might just give a bounce here and go back up. And again, if it pulls back here and bounces, it'd be bouncing off these highs right here. So we'll see. So that's another thing to mention is, as I mentioned, a lot of times you're upside down on risk to reward, especially if you're closing at 1-to-1. You're closing at that first level because Nasdaq a lot of times won't even get past that level. If you're using the halfway point as your stop, you're upside down. Okay, you're backwards on your risk to reward. More risk, less reward. That is okay from what I've seen on the back testing, because the percentage of winning trades outweighs the losers. So you're still at a positive overall at the end of each month, which is what you want. And you just have to take the good with the bad. So you have to look at that. You have to look at the good and the bad, and you have to decide on your stop placement. I haven't taken trades in a reverse of it. So like this right here, this is our mid-level where this stop is marked, this line. So that line, if I take it off, that's the mid-level of the box. So I have not taken that as a trade in a reverse direction. So I'll use it for my stop, but if it breaches that level, such as it did here, so it breached the halfway point and pulled up, I'm not taking that as a buy signal because it breached that. It pulls back. I don't have a buy limit order in here for it to trigger. If that gets messy, if I would have taken either of those would be losses, and then are you short again on these? So the only time I'll look to trade in the middle is like I did this morning. If I'm looking at traditional charting, I'm looking at, I looked at it breaking that retracement line. Why was I calling it a retracement line? Because overall it's been short. I mean, if you look at that downward move, right? Look at the downward move. So it pulled off that new all-time high, popped back up. We had this morning, during the first, even before that, about 9 o'clock, we had a downward move that started. So it was bearish. So it's bearish over here. Okay. So since it's bearish over here, lower lows, lower highs, when it starts moving back up, it's a pullback. It's a retracement. I draw a retracement line. When it breaks that retracement line, you can either take it there or wait for it to come back and test the retracement line, red candle entry. So I got in here. It's either there or when it pulls back to test the back of that line, this support level, this inside top, well, then you take the red candle there. So you're in on either one of those traditional, candlestick, chart, technical trading patterns. It just happened to pull back deeper. That's all it is. Okay. That's why we ever stop out where it was. So overall, it was decent, but not the best today. But again, we weren't expecting the best trade day today because of that right there. We were at a red zone, 4-hour time frame. I just don't expect it. If we didn't have a 4-hour zone there, if this 4-hour zone was lower, then I would expect it to push to the downside. And glad we did the put on a buy limit order for 8 here. That's just what I typically do. If I put on 10, I close out 8. If I put on 5, I close out 4 as my partial. If I put on 20, I'll close out 16 or sometimes 18 and only let 2. Just kind of depends on what the highs and lows look like, what the swings look like, and where it's at on the chart. Really tapping that line. There we go. So it's breaking through right now. So I got to wait for this candle to close. There it took us out. So now I would have to turn the trail off because we're in a deeper pullback, is what that means. So since it's pulled back up and broke that, this high here, you know, which is basically the high over here, it's broke all that. That's why the trail's changing, that we know we're in that deeper push, which could become our trend change for the day. So that's where I'd come in and just turn the trail off because it's not needed anymore. I'm not in a trade, and then focus on entry. So I'll watch this the rest of the afternoon. I'm not going to watch it. I'll set an alert. So 2 things, and I'll do it before I leave. But one, I'll come in and let's see. We want to come in and set an alert here on this line for that level to be broken. So if it comes up and closes above that, I want to be notified. And then I would set an alert right here on this high. And I'd want to be notified if we get up there. So I would actually come up above it a little bit and just set an alert on that too. So we would add those 2 alerts and want to be notified when it gets above those levels. And then pretty much leave. So I'm pretty much done on this. So I'm out of the trade. Got what I got. Oh, let's see what, sorry. Let's pull that again. Let me see what we lost back on that. Because I told you it was going to be quite a bit of it. 91. All right, so on the runner. So we lost back 91 is what we lost on the runner. So basically 101 is what we got on the day, because that's our loss back. So again, not the best. It's okay. 100 on the day. I don't know. Most people make about $150 to $200 a day working 8 hours. So that's okay. I mean, that's decent. The only other thing I could have done, I guess, would have been move my stop to break even after I hit profit. But there was my entry. So if I did that, I'd been stopped out a little earlier. I'd been stopped out in here. And then I would have had that 192 for the day. But instead, I stayed in hoping it would break to the low side. It didn't break to the low side. Power trade indicators switching over. So we have both the lower time frames green, and we have the higher time frame here wanting to go green. That's why we're seeing this buy signal pop up and down. So we may actually see a buy signal in here, and then we may see that push to the high side. So I'm going to look at trading that to see if I can get into another trade, because I'm really not happy with just that 101 for the day. But ultimately, you have to decide for yourself, what are you looking for on a day? Most people are looking for that $100 or $200 a day. It should be what you want to make per day. Like if you go out and work 8 hours for somebody for the day and make $20 an hour, well, you're making $160 a day. Okay. So if you can make $200 a day trading and only do it in a few hours, Well, then why wouldn't you want to do that? The thing is, you have to be consistent in grabbing that 200 a day. If I fail, like I did today, I didn't get 200 on the day. Okay, now I had 192, stayed in, was willing to leave my stop, trailed it down a little bit. If I would have left my stop where it was, I'd still be in. Again, I have to look at that. So my stop was up here somewhere above this high, and I have to look and say, if it turns and drops finally, then I should have left my stop where it is. But the reverse side of that, I also have to look and say, if it pulls back and hits that, I would have lost more. Okay, I lost back 91. So I lost back another 30, 40, somewhere in there. Okay, so you have to decide how much you want for the day. If you're looking for 200 a day, and you do what I did today, and you only make 101, okay, that's all you made for the day, and you're done for the day. Tomorrow is another day. So what if instead of 200 tomorrow, you actually bank 300 because it runs? You get a little runner. Or you make 250. You make back an extra 50 for today above your 200 goal. And then the next day you trade. And you make an extra 25 on that day or an extra 100. So it's all going to balance it out at the end of the month. Just keep that in mind. Every day doesn't have to be a home run. Every day does not have to be a home run. Okay? You can take those singles, doubles, triples, right? Doesn't have to be a home run every day. You can hit singles, doubles, triples for the day, and that should be fine with you. Okay? It's all about consistency in your trading. The rest will all follow. So, okay on this one. Again, let's glance down to the rest before I cut this off. Everything's in the middle. Everything's pulled back. So you would not, actually on Nasdaq, keep in mind you would not have been in. The only reason I got in is because, again, it pulled back and I took a short. Okay, I took a chance on that short. It only paid off because, we noticed it wicking here, down here, not getting to the inside bottom. So we put that pending order to close 8, so an 8 buy limit, and it closed 8. It actually, if you notice, it wicked down toward this little doji candle. So it wicked down there toward that candle. So that's the only reason that we have profit on a day. If you're looking for the ORB breakout, it didn't break out on Nasdaq. You wouldn't be in a trade at all. Going to S&P, you wouldn't be in a trade at all. There's no buy signals or sell signals up there, and no buy signals. So you wouldn't be in a trade. But look at it also. Again, red 4-hour zone. Okay? So again, it's no wonder why these didn't break and run. They all move in sync for the most part. So there's Dow. Dow, you would have took a sell. It hit level 1 only. It only hit level 1. And it looks like we're getting a buy here on Dow because we're getting you're getting the level to pop back here as it's flickering back up above and below. And then we look at Russell. Russell, you would have been in, but it did not go to level 1. Okay. So a little shaky on all of them today. Again, Dow's the only one that went to level 1, and then it turned. So you have to look at this data and look back historically and say, well, if that's what it's going to do most of the time, how can I profit off this strategy? If it's typically only going to go to level 1 and touch it and go back, how can I profit? Because you want to be in profit as quick as you can. Okay? You don't want to be sitting negative all day. And you only typically have a couple hours trade. We're starting at 10. We're looking at 10 to noon. Okay? So again, that being said, figure out a way to profit. How are you going to profit knowing that it'll typically only go to level 1 instead of all the way? And we've got a wide zone. Okay? So hope you enjoyed this, and I will see you tomorrow morning.